All right, traders, welcome to day 2 of Algo Week. I'm glad to be here with you. Thanks for being with us. This is a free event for the entire week where we're going to go over all things algos. And we're going deep, we're going wide, we're going over everything because we wanted to really make sure we gave good training and empower our traders to do really well with these. So just to, before we kick off, how did you guys like yesterday? How are you feeling about the event so far? Are you getting something out of it? Give us a couple comments in the chat box. Let us know what you think. Do you enjoy it? Do you think like this is helping? Yeah, give some insight on that. That's great. So very cool. All right. So of course, before we dive in, we need to go over our disclaimer. We can't guarantee results. Products and services are for educational purposes. Right. So the algos, we covered ATR and we covered thrust yesterday. So that's great. And then today, just reading through some of the comments, making sure if there's any questions in here. So I think Jeff's handling questions for us too as we go. So that's great. I move this out of the way. There we go. Get situated here. So today we're covering CWAP and hybrid. All right, some of the details. I want to kind of look at some of this. We are going to work on the engine at least some today, time permitting. And we'll go over the details of the engine. We'll go over the details of the filters. We'll go over money management. Okay, we've already covered a lot on best practices, pairing algos with markets, scalping, day trading. Just looking through the list, making sure that we're catching everything. Cool deal. Yeah, I think we're in good shape. We're doing well so far. Yeah. Oh, thanks, David. Appreciate that. Warnings are coming out Friday. We'll get them out. It was kind of the easiest way versus sending out tons of emails and trying to figure out where to post them and all that stuff. So we've got a separate link that'll get sent out with all the recordings on Friday. So, but we'll be going over everything each day a little bit. So there'd be some stuff in there that you want to go back and check out, but for the most part, we'll be going over everything again. So good stuff. All right, let's go down to the CWAP algo. So what is CWAP? So yeah, here goes my voice. All right, so let's go grab my draw tool. So what is CWAP? Well, most of you are familiar with VWAP, right? VWAP stands for volume weighted average price. Okay? Volume weighted average price. So this is based on a daily volume profile. And think of it like this. The VWAP is really, it's going to be like a moving average, but weighted based on volume. That's really what it is. Okay. It starts at 6 p.m. each day on futures. So at 6 p.m., when the market reopens, then it starts plotting and it continues to plot off of that as an anchor. Okay. That's how the typical VWAP works. CWAP, on the other hand, is a cluster weighted average price, just like VWAP. The only difference is that the CWAP only accounts for the main levels of volume on each bar. So whereas a VWAP is going to take into consideration the volume for the entire bar, the CWAP only calculates in the 3 highest levels of volume consecutively for each bar. That's the cluster. So think of it like the point of control plus a couple tag alongs. and that's what the CWAP is doing. Then what we do is there's a channel that's put on either side of the CWAP. So this is the CWAP, this green dashed line. We've got a excuse me, a channel on either side, similar to like a Bollinger Band. Okay. It's just standard deviations is what those are doing. Okay. Now, the main difference as well is that the VWAP, like we said, is anchored to 6 p.m. each day. The CWAP, we can anchor these anywhere. And the system, the CWAP algo, will auto anchor the profile and auto anchor the CWAP for you. The way that it does this is based on a structure break. Okay, so here's our pivot. We came down. It plots the structure for you as well. It came through, we broke through this structure. As soon as that happens, it plots a CWAP off of the anchored low, off of the low that led to the break of structure. Okay, so we're taking some SMC concepts, some structure concepts, some volume concepts, momentum. We're putting it all together. Okay, so that's in volume, obviously. Yeah, so really a great system to trade with. So how do we get the most out of it? That's what we're going to look at here today. You can day trade, you can swing trade, you can scalp trade, you can trade this on futures, you can trade it on Forex, you can trade it on stocks, you can trade it on crypto, whatever makes you happy. It works. This is CWAPs and anchored VWAPs are my favorite thing to trade with. Have been for many years. I love trading with these. Now I do it manually because I have a different approach, but this can work really great for you too. Really a great system. You can trade any time frame. You can trade any bar type. There's no shortage of trades and so on. Okay. So here's what it looks like. So here's an example of a trade. The breakout level is this line. You see, every time you get a pivot, it's going to put this line in there so you know where the breaks of structure are. So here's the break. As soon as that happens, then we anchor off of the low. And then when the market comes back into the CWAP after the break of structure, not before, after. Because remember, this does not exist until the structure is broken here. Okay. Once that happens, it will trade off of the edge of the profile or off of the channel. The stop, we're going to talk about where to place the stops. And then the target is going to be, there's different ways that you can work on targets as well. Okay. Good stuff. Here's another example. So we've got the break here. It broke this pivot. Okay. Came back into the channel. It automatically anchors that for you as soon as that happens. And then comes back into the profile or into the channel, sorry. The stop in this case is set to the other side of the channel. Okay. And then there's the target. Cool. And yes, we do trade with CWAPs in the gap trade room. Yes, we do it manually, but yes, we do trade these. All right, so algo-based stops, what are your opportunities? So we have the channel, okay? Everything is based off of that. Your entry is going to be at the edge of the channel. All right, and then the stop is going to be based on the other side of the channel, in theory, okay? So if you have the stop set to, 100%, which is set up as a 1, actually. So it'd be set up as a 1. If you set it to 1, your stop is going at the other edge. If you set your stop to 0.5, it's going in the middle of the channel, right at the CWAP. 0.75, 0.25, 1.25, and so on. Okay. So that's what's happening for the stops. Yeah, here's the entry. Stop is set at the other edge of the band. And then targets, you have different options for the targets as well. You can do, ticks. You can do ATR. You could do risk reward, but you can also do an algo-based target. The algo-based target is based on the swing point that led to the pullback. CWAP is going to be great for trending markets. This is a trending system. Yeah, so trending all the way. If your market is not trending, you have the choice of finding a time frame that is trending to run the algo that day, or find a different market. Okay. So, it could be wise on that. You could have it one setup for each instrument, on the equities, right? You've got your 4 different equities, and you could say, well, NQ is the strongest trending. I'm going to run it on that one today. Maybe crude is trending that day. Run it on crude. Maybe gold is trending that day. Great. Run it on gold, so on. Okay. So the target then is based on the swing low that led to the pullback, which is right here. Okay. I know there's a lot of moving pieces. It's not hard. It just might take a couple times to grasp it or whatever. But so here's the edge. Here's the pullback point. This is what led to the pullback, right? The target is based on that. If this was probably set to like a 0.8 of the excursion, okay, and you can set it, 1 would be right at the level, 1.2 is beyond, 0.8 is above, okay? Good so far, making sense, good deal. There's another example of a long, okay, there's the break. Again, the CWAP does not plot until you get the break. At that point, it plots. If it comes back into the channel, it takes a trade. Target is based on the swing high. If you set it that way, stop is based on the channel. Here's the short, break, pullback, came in. There's the channel. And this one was set to most likely, looks like it might have been set to the swing low. So algo-based targets. Yes, everything is recorded. Yeah, absolutely. All right, so let's jump in and take a look at it. Yeah. So here's a template that our team has built for you guys. So this is our free gift to you. Enjoy it. Let's go through the settings and talk about what they are. Let me pull up a chart. We're going to pull it up on the market. Which one are we on? NQ, I think. MNQ, maybe.
I think that's MNQ, yeah.
Yeah, NQ.
Or NQ, yeah.
NQ 1200 volume. So let's go to NQ. Let's go to 1200 volume. Put 5 days on here. Cool. All right, so I got my chart. So how do I get the strategy on there? I'm going to go to strategies, this little playbook looking thing. And then we're going to go to ARC, CWAP Algo. And I'm going to pull up the template. I'm going to load the template. Be this one here, I think. Yep. Thank you, Robert K., for putting these together for us. Nicely done. And we're going to enable, and we should be good to go. A lot of this stuff is, yeah, 941. Okay, cool. Let's go ahead and run it. Jose, yes, that is correct. Works like the channel for the ATR ball. Yeah. All right, here we go. So it's a trending system, right? So use it on trending markets. So here's an example of a trade. Got the break of structure here, came down, came back, tagged the CWAP and left. Tagged the CWAP and left. Tagged the CWAP and kept going. Not everything is 100%, obviously. At this point, we've got our 1, 2, 3, 4, 5, 6. You don't want to be trading the you don't want to be trading the system if it's overextended like that. You could do two trades per direction. That would limit the number of trades that are going to come in to so like this one could be excluded in that case, as well as this one, as well as that one. As soon as we get a long, then it would look to take a trade here, and so on. Cool. So that's a way to get around that. So if you find yourself trading, markets that are really overextended, that's the way to get around that. Okay. So let's do again, we've got kind of a couple options, when it comes to, go down here. We'll make some more notes. We've got a couple options in terms of algo trading. It's good to have options. Some of you say, well, I don't like the options because then I don't know what to do. Well, let's break it down. Let's go through them and help you figure that out. Okay. All right. Let's go through this. So option one, semi-auto algo trading. What does this mean? This means that you are turning on and off based on preference or location, so on. Okay, that is like really hands-on. You're going in here, you're flipping it on and off based on what you want to trade. Okay, that is very active. That's going to be the active version. Okay. Then you have daily preference, like daily trending preferences. So this would be you would turn on or off certain algos based on your daily, analysis, right? So if if NQ is trending for the day, then you're going to say, okay, I'm going to find my trending settings and I'm going to run those on NQ because NQ is trending for the day. And then maybe crude is going sideways. And so you're going to find your sideways moving algos. And then you're going to put that algo on that market that day. Okay. So that's kind of like a somewhere in the middle, not quite as active. It's just active in the morning. Okay. And then the third is going to be completely passive. This is 100% based on optimizations only. You take the good, you take the bad, and there you have. Okay. So this is going to be completely passive. The idea with doing it that way is that you run multiple algos on multiple markets each day. Think of this like you've got scalper, you've got day trader, and you've got investor or swing trader, right? That's kind of the best way to look at it is what level of activity do you want to have as an algo trader? Maybe some of you are saying, I just need the algo to execute. I know what I want to do and where I want to do it. I just want the algo to do it for me. Okay. That would be me. This is me right here. I would be the one going, I know what I want to trade. I know where I want to trade. I just want to turn the algo on and let it do my work for me. So I don't have to figure out the contracts and where's my stop and target going. The algo is going to do all that for me. It's also going to know exactly if those conditions are met for me to be able to get into a trade, right? As a trader, we miss things from time to time. We're human. Of course, we're going to make mistakes. We're going to miss things. Sometimes we get lucky, sometimes we don't. But we make mistakes. So that is one approach. Most traders, I think, are going to fall into this category. These are going to be the professionals, I got a business to run. I got a day job, 9 to 5, and I'm just going to come in the morning before the market opens, and I'm going to check out my markets. I'm going to put my right tools in the right slots for the job, and I'm going to hit go, and I'm going to go about my business, and I'll check in on it and maybe watch it during the day, right? That's probably where most traders are going to fit in. And then you have the long term. So think of it this way. This is going to be active. This is going to be more of a day-to-day performance basis. Okay. This one might be more of a week-to-week performance basis. This one is going to be the long game. Long game. Think of it like a diversified portfolio. You don't expect that your stock that you're holding is going to make you money every day. Maybe it does. Maybe it doesn't. Maybe it's the next it's the next GameStop. You're holding the short squeeze. Diamond hands, baby. All right. So maybe maybe this is where you fit into that category because you really just want to focus on the optimization and just let the algo do what it's going to do. And you have multiple algos, and some algos are going to do great some days and some algos aren't. But in the long run, the hope is that their portfolio of algos looks a little something like that, right? Hopefully. So that's the idea. So those are sort of the three different ways to go about it. So as we review each algo, we're going to look at all three ways of doing that. Okay. That's why I'm doing this. I wanted to kind of break down what we're looking at and why, because I didn't do that yesterday. So that's the idea. So I'm giving you all three versions of how you want to run the algo. So that's why we do the optimization together. That's why we look at, do we just, look at, trending based markets and only deploy those days. In that case, it's not as heavy on the optimization. We just need it to be good on the days that we're going to run it. But we don't need it to be perfect every day because not every day is a trending day. And then semi-auto just says, look, I'm telling the system when I think it's trending, I'm going to set it to go. Okay. So for me, this would be my trade right here. Okay. As a really active trader, I would set this trade to go long right there. And then most likely I'm not going to take this trade. It's a preference thing. It's, what do I see in the market? Okay, what was my last impulse leg? We talked about this a little bit yesterday. What's an impulse? It's a trending leg. Okay, this is an impulse. How do we know it's an impulse? Because it broke structure. This is an impulse. How do we know? Because it broke structure. Okay, so this is my last impulse leg. I will never trade inside of an impulse leg with CWAP. Never do it. Now there's it with this system. Okay. If I'm more of an active trader, I'm not interested in trading the system until we break above this. Why? Because this is the level that caused the break of structure. Prove to me that we're going long first. Then I will trade long. I am not touching this with a 20-foot pole. It's right in the middle of the wave, the impulse wave. So why would I want to get long here right in the middle? Don't diddle in the middle, right? This one, on the other hand, we broke through that level. We came back, beautiful pullback. Took a little heat actually, but still a nice trade. Okay. So that would be my approach if I am semi-auto or, really active with it. Okay. This one not taking. Why? There's no follow through. Look at the size of the CWAP. You see how weird it looks? You see how it came through and then it chopped through and then it went up. I want clean trades. If I'm active as an algo trader, I want clean trades. You see how this CWAP is clean? Goes straight up. It's really nice. It's coming back into kind of the area that broke structure. Looks clean. I would take that. What about this? We broke down. We broke the impulse. We're trading down 100%. I'm taking that trade. Does it work? No. Why? I don't know. Not every trade works. We could sit there and analyze it all day, but we don't need to. That would be a loser for me. Let's keep going. What about momentum? We looked at momentum yesterday, right? This one actually here is a good trade too. Just didn't work. 949 though, so sometimes those can be tough. Trading, 930 to 10 off the open can be pretty tough. Okay. This one, I would have liked to have taken the trade here. So let's dive into this because this is important for us to go over actually. Let's go over this trade. This is very important with this system. It's a question we get often is why did we not take this trade? Let's take a look at it. So here's the break of structure. And there's the break. And then it came back. You see how it tagged there? So it looks like there wouldn't be a trade. Sorry about that, guys. Okay, so you could see that it came in here. Why did it not take the trade? And I'm going to show you right now. So on this candle, where is the CWAP? It is right here. Oops. Let's try that again. Okay, so this candle, the CWAP, the edge of the CWAP is here. Notice how the next candle did not make it to this level. Okay. It never made it up to that level. That's why the trade was not triggered. So when it comes back in, personally, as an active trader, it's not a clean pullback to me anymore. So I would go, not interested. Okay. Let's add the VM lean on there and we'll take a look at momentum. Where we looked at momentum a little bit yesterday, we're going to go through it again today. Okay, so let's throw the panel on here. Enable that. Okay. All right, so what is momentum? Momentum's down. Now, let me make it bigger so we can see. There we go. Momentum's down. So it looks good. It looks good, other than the fact that it already came into that area and left. So to me, that's not a trade. This one, love it. Love everything about it. Market's down, structure's down. There's your impulse. We broke through an impulse. We've got, momentum is down. We're not in divergence. About as clean of a pullback as you're going to get. And look at how clean the trade is. Okay, the trade is very, very clean. Goes right to target. It's a beautiful thing. What about this one? What happened here? Let's zoom out a little bit so you can see a little better. What happened as we came back into this pullback? Who can tell me a reason they would not take that trade if they're trading more of a semi-auto active? Anybody got some ideas? Too shallow? No? No, looks fine. Nate nailed it. Divergence. Daniel nailed it. Divergence. Yeah. Look at the divergence in momentum. I told you, if all you did was run algos on the basis of momentum and divergence, you'll make a killing. Because the systems are good. Systems are very good. All you have to do, if you want to be active, is go, am I trading based? As soon as you start seeing divergence, this has come down. You do not trade it until, at this point, once it breaks, you literally turn the system off until you see that this level is broken on momentum. And until that happens, you don't trade it. So as a short trader in this case, you're going, I never even turned it on because I was in divergence that whole time. So that is kind of how you do it. So if you're looking at the hard right edge, right? Because if you're going to be active, that's kind of what you're looking at. Okay, so here's the low, right? There's our low. You can put a line there. Let's get rid of this one. As soon as that happens, I'm looking at the low in momentum as well. And I'm going to put a line there. As soon as that breaks, I'm looking at this to be broken. If I'm literally watching this the entire time. If this never gets broken, I never engaged it. I never engaged that to go short there because this never broke through the bottom. Makes sense? It's an easy way to get around divergence. Okay, let's look at this one. Let's look at this. So that's our low. Let's bring this up to here. Let's say we're right here. Okay, we're coming down. So there's our low. And now I'm looking at my second, my second pullback. I'm waiting for the break of structure. Okay, there's a break. All right, so now I've got my break. This has also gone below the low. Okay, so this is something that I'm looking at going, okay, I'm in business. I can trade this because the momentum is lower. So I'm good to go, and I'm enabling it to go short. And I'm saying, yep, I want a short, want a short, want a short. Is back down. I broke through an impulse. Okay, I broke outside of an impulse. This tells me that I'm in a trending market condition. That's why there's my trade. There it is. Cool. Does Algo take momentum into consideration? Yes. Algo does have momentum as a filter, not divergence. It's something that I have been squawking about for how long, Jeff? 2 years? Since we started building algos, I'm like, guys, can we put divergence in here? Come on, let's go. What are you waiting for?
We are well aware. We hear about it a lot, often from you. So.
Yes, I'm the biggest squawker about that because it's so damn good. That's why. I just want all my friends who buy algos to make lots of money. That's what it comes down to, really. Look, I don't even really trade these things. I mean, I do for a little bit to get used to them, but I have my own way of trading and it's discretional. And I think the algos are fantastic. I just prefer to do things in a different way, right? So, but I really am a huge proponent of having divergence. So what about this one? Would we trade this trade? No, not if you're looking at divergence. Okay, there's that right there. Never got above it. No trade. Okay, so that's active. Let's look at daily trend preferences. How do we do that? Okay, so the big question, the existential question we ask is, how do we know if the market is trending? How do we know? So let's go through it. So I'm going to pull up a chart here. So this is a 1200 volume. It's going to be probably about a minute to a 90 seconds worth of, average bar time. So I can still use my 5 minute as my higher time frame. Okay. So there's a couple ways that we looked at yesterday to be able to tell, is the market trending or oscillating? How do we know? So let's go in. We're going to use some indicators to help us on our case here. We're going to go to swing structure and we're going to add it to swing strength of, let's go 3. Okay. This is going to give us our zigzags so we can tell what structure's doing. That's one way to do it. The other is to go EMAs, 2, 3, 4. Okay. I'm going to have 25. I'm not going to change the colors, so just bear with me. I'll tell you which one is which. 100, 200. Okay. 25, 50, 100, 200. This is kind of a common accepted way of knowing, is your market down or is it up? If you are a trend trader and you are trading on the higher time frame, 5 minute, whatever, as soon as all of these algos are done crossing over, you see how we've got one cross here, got another cross here. As soon as those are all done, this is when we know we are trending right there. Yeah. A 200 is a really big level that a lot of traders pay attention to. Yes, for sure. So at this point, market is trending. But if we're trading there, we're saying, yeah, we're in the trend. That does not change until we get some squeezing of the EMAs, which happens here. Until they get back to where they're all, on above each other or moving in the same direction and so on. At that point, then we can look to go into trending again. So this one is going to be our 200. Okay, how do we know that? Just by looking at it, you can tell this is the slowest on the way down, right? Do you see how this one is actually over here? It's like kind of looking at a jumbled mess of cables. That's the way I see it, but I've played music and electric guitars for way too many years and did sound way too many years. So I see a jumbled mess of mic cables. That's what I see. Anyway, so here's the crossover, but you see how the 200 is not, it's not at the bottom. Like it needs to be 200, 100, 50, and then 25. It needs to be in that order. If it's not, then we're not trending. Plain and simple. So we stopped trending here. We still have not gone back to a trending market. So if we're trading this on NQ today, this is not going to work. It's not a trending market. So I'm literally not going to run this algo on that market that day. And you go, well, I might be missing out on good trades. No, you're missing out on coin flip trades. Make no mistake. Okay. If you're trading at 1-to-1, and you're trading coin flips, which are 50% win to lose, right? If 50% of your trades are winners, is that doing you any good at 1-to-1? No, you ain't making any money. The only person that's making money is your brokerage. But I got news for you. This right here, that's most traders. Most traders. Do you want to know what the average numbers of traders are? Are you guys ever curious about that? Like from a macro perspective, tons of traders, what do they really hit in terms of numbers? Are you guys curious about that? I'm going to tell you anyway, because I find it really, really fascinating. Most traders have a 62% win rate. That's the average win rate among day traders, or retail traders, I should say. 62%. It's pretty good, right? It's not bad. 62% can make you some money. What do you think the average win and average loss is? Yeah, what's the risk reward, right? So if you see this, you go, "Wow, that's good. Yeah, that's great. What's your win? What's your risk reward?" The risk reward is about 1-to-2, 2-to-1 really. So if you're risking 1, they're making about 0.6 on the trades. That's the average. So are they making any money? Nope. Because they're cutting their wins short. They're letting their stops run. That's the average. Those are the averages. So if you're looking to trade coin flips, you're just not going to make any money. The only way you'll make money on coin flips is if you're 2-to-1, or at least 1.5-to-1, right? Then you can go out and it's fine. I'll take coin flips because I know that on my winning trades, I'm going to make a lot more money. Yeah. So this data is actually provided by European market brokerages. Yeah. They literally have to provide that data. It's not like the US where we just have to, brokers just have to post a disclaimer saying, high risk, you could lose your money, so on. In Europe, they actually have to post what those numbers are. So yeah, interesting, isn't it? Yeah. So market's not trending that day. Let's go back to a market day where it was trending, and let's see what the algo does. Okay. So on this day, we were trending. So let's go in and we're just going to draw a box here so I know that's the day it was trending. And let's see what happened on that day. Okay. Now, can you go long and short? Yeah, it's up to you if you want to go both directions. Obviously, short's going to probably make the most sense going into that day. So you got one trade was a stop out. That trade was a win. That trade was a win. And that trade was a stop. And that one was a stop. And then you got another win. Okay, so average win lose, it's about 62% win rate, but the risk reward is about a 0.6 reward. So no money on the table. So you got 1 win, 1 loss, 2 loss, 2 wins. So that's even and even. So that would have been a break even day, actually, even though all your trades were shorts. And why were they shorts? Because the market was trending short. So here's my thought on this. Well, this would have reset direction anyway. Like I say, you can go to, number of trades. Oh, here's another one, actually. So that would have been a winner and then another loss. Interesting. Chaos. Can't win every day. I would love that to be the case, but unfortunately, not so much. Let's look at another day. Let's pick one more. I didn't realize I still had so many windows open. Hang on. What's this one? Oh, cool. Interesting. Let's go. Is it this one? There we go. Let's see if we can find another day. Let's add one more day. Now, remember, this template is set to be optimized for all days, not just trending days, right? So if you're going to optimize, bear in mind that anytime you optimize, it's based on all market conditions, not just trending markets, right? Because the algo doesn't know if it's a trending day or a oscillating day. There's no way for the algo to know that. So you have to tell the algo. So bear in mind that that's those settings. We can come up with settings that are based on, daily deployment, we'll call it. We'll call it daily deployment. This means you're going to deploy based on what the market conditions are for the day. Okay. We could look at it that way too, but these are based on, these are based on, every day. So here's another day that was trending as of right here. Okay. See how, oh, actually, sorry, right there. As of right there, it's trending. Now, you may have started the day here, right? So let's look at this one. Let's go into this day. This would be something I'd be curious about. Because going into the day, you were kind of oscillating, but things were kind of starting to move down. So let's go check it out. We got our line in the sand. Make more sense to optimize using trending days only. It's you could one way around it, right? You could go back and look at each day, right? You can go to a 5-minute chart if that's your higher time frame, and you can go one day at a time. Let's say you're testing for 30 days. So you go back 30 days and you go, okay, on May 30th, trending. June 1st, I don't know what the dates are, oscillating, right? So you're going to go, I'm not going to test that day. On the newer algos, you can block those days and just optimize it based on the trending days. If you want to do it that way, yeah, by all means. It's a little bit more involved, a little bit more work, but we talked about this yesterday. There is not a lazy trader on this planet that makes money. Let's just call it what it is, right? There is not a lazy trader on this planet that makes money unless they've got a significant amount of money and they're paying somebody else to trade it for them. So don't be a lazy trader, right? Be willing to do the extra work that the 95% of traders are not willing to do, because that's what's going to make you money. Okay. Obviously, algos are designed to give you some advantages and some opportunities and so on. Anyway, so let's say you actually, it's interesting too, in the oscillating market, there was actually no trades anyway. There's no trades. This one didn't fire off. And so the first trade didn't happen until after it was a trending day. And then that one was 50-50 there, and then a win, and then another win, and then another win, and then a win, and then a stop. So pretty good day, right? Pretty good day. So trending days are going to be the best. This one's already optimized. This one's already optimized. What kind of things should you look to optimize with this algo? Let's go over that and pull up my analyzers. This one, yeah. Okay, so let's look at the metrics. We're going to go through the metrics too, because I think there are some things that maybe I take for granted that everybody understands what these numbers are. And some of you might be new to algos, so let's go through it. So total net, this is how much did you make? Okay. Total wins, total losses, commissions, okay, is right there. Profit factor is going to be your wins versus your losses, okay? So look at it that way. Wins versus losses is your profit factor. So you literally take 28,306 divided by 14,125. That's your profit factor. And that's what that number is. That means your wins are double the size of your losses, AKA anything above 2 is solid. Very, very solid. Okay. Max drawdown from your high water mark. Now, this is at the end of the trade, not intra trade, but from the end of that trade, this is your high water mark. How far down does it go before it makes a new high water mark? In this case, it's telling us we lost 1250, call it, before we made a new high water mark. Okay. Why is that one important? For prop traders, for everybody, for sure, but prop traders especially, because you've got those really tight drawdown requirements. Sharp ratio, look it up. Sortino ratio, look it up. I'm not going to go through the details on those. Frankly, they're kind of over my head anyway. R squared, no idea. Probability, not a clue. Start date, end date. Total number of trades, self-explanatory. Wins, that's your win percentage. How many trades did you win? Okay, you got 83 winners, 48 losers. What's 83 divided by 131? 63.36 win rate. Okay. Profit, risk reward. It says ratio of average win versus average loss. This is your risk reward average. So what this is saying is that this is trading at a 1.16 reward for every one that is risked. Okay. How do you know that number? It's these, you take your win divided by your loss. Win divided by your average loss, and that comes up with that number. Average trade is literally your total net profit divided by the total number of trades to get your average trade. Okay. Max consecutive winners and losers, largest winner, largest loser, average trades per day, average time in each trade, 5 minutes. This is how you know it's a day trading. It's a day trading template. Average bars in trade, who cares? Profit per month, it's kind of a good thing to know. You can tell profit per month, which is a nice thing to look at if you're, sampling, a couple months or, that kind of thing. And how do you get, it's a great question. How do you get 14,000 at 12,000 per month? So this is just over a month. Let's see. So just over a month's worth of data. So that's why we were at 14, but we got about 12 to 13 for the month. Longest time to recover. In other words, how long were you in a drawdown? You were in a drawdown for 3 days, which is pretty solid, actually. Anytime you're in a drawdown for less than a week is great. Very, very good. If you're in a drawdown for a couple weeks, that's not terrible. Not the end of the world. Okay. Yeah, not a year. Yeah. No, this is just about a month worth. Yeah. Max time to recover. So longest flat period, how long do you have between trades? So 3 days. Average MAE, MFE, ETD. What the heck is that? MAE stands for max adverse excursion. Okay, so max adverse excursion. MFE stands for max favorable excursion. What the heck does that mean? That means in each trade, it's going to calculate how far down, how far negative you were before you got out of the trade. Okay, it doesn't mean before you took profit, doesn't mean before you took a break even. It's how long, how far down did you go? In other words, how much heat did you take on? How far in the red did you go before you got out of the trade? That's what that number is. It takes all of those numbers across each trade and averages them out. Okay. Max favorable is the opposite. How much were you positive before you exited the trade? Okay. And then it, again, takes all those numbers and averages it out. So what you really want to know is on your losers, how much were you up before you took a loss? Usually that number is going to be pretty small, not always. If you're seeing that you're almost hitting targets and then going on to hit stops a lot of the time, what does that tell you? It tells you that your targets are probably a little too loose. You might want to tighten up your targets. Might even be able to tighten up your stops. On the other side, how far negative were you before you took a winning trade is another good thing to look at because it's going to tell you, can you tighten your stops? So let's go into the trades and actually take a look at them one by one. And it's going to show you max adverse and max favorable. So we want to first know what's our average trade, winning and losing. So we're at about, our largest loser was 388. Our average loser is about 300. Okay, so if we go in here and we know our average loser is 300, then I want to know based on max adverse, am I getting pretty high up on that number before I take a winning trade? What you're looking at is I've got it set to the lowest adverse. to the highest. And so what you see is that as we start to get up to that 200 mark, we start seeing the losers come in, obviously, because max adverse is going to be, all of the number because it's a losing trade. So in this one, there's very few profits in here. An easier way to really dial this in would be to look at if you're getting a lot of adverse on your winners, then you know that your stops are in a good spot because you're giving yourself enough breathing room to be able to hit those targets. Okay. If you are taking a lot of stops, or let's say this number is really small on a lot of these trades, which in this case it actually is, then that means you could probably tighten up your stops. Does that make sense? So if you have a lot of them that are showing like really no adverse excursion and you're still taking profits, then you might tinker with looking at taking tighter stops. Okay. On the other side, if you have very low favorable on your stop outs, then okay, well, maybe you need to look at where your targets are, or maybe you could set a break-even point, that kind of thing. Okay. So that's what those are doing. So that's what that means. Just good to know, it's hard without static, really the static targets where you're like 20 ticks on every trade is your target. It's kind of hard to dial these numbers in with, where you've got different position sizes and different targets and so on. But you could still look at them. The way that I like to do it, I just like to go look at the chart and have the chart tell me if my stops are too tight and too loose. That's the way I prefer to do it. So this one is the NQ. So it's I guess the mini. 3 micros versus 1 mini pass. Yeah, I think micros are great. Depending on your risk per trade. It's really what it comes down to. All right, so let's go through settings and let's see what we've got here for settings. Swing strength. What does that mean? That means how big are your zigzags? There's your 6 versus on a tighter swing strength. You're going to have more zigzags. You might have one there. You got that. You might have a zigzag here. Okay, it's going to be more active with a lower number. Okay, so the bigger the number, the less zigs and zags. The lower the number, the more you have. This is very important with this algo because it literally determines how quickly you're getting into trades. Very important. Include wicks in the pivots. Just include the wicks, okay? Minimum boss line length. What this means is how far, like this one, there's only like a few bars. 1, 2, 3, 4, 5, 6, 7. It looks pretty small. That this is set to 3, meaning that anything, as long as there's at least 3 candles, it'll trade it. So you see how this one is 1, 2, 3, and then it broke? That was valid. Okay. So it's pretty, pretty small number. You can bump that up if you want to make it be bigger pullbacks or longer pullbacks or whatever. Standard deviation. This is actually the diameter, not the radius. So with a 1, this means that this is actually 0.5 on either end, if I'm not mistaken. Is that right, Jeff?
Right. Plus or minus. The line in the middle is the CWAP line, and then we add and subtract to that to get the upper and lower boundaries of the band.
Right. But a deviation of 1, it's actually a deviation of 0.5, isn't it?
Right. Right.
Yeah. Yeah. So it's 0.5 on each side, so 1 across the entire channel. So just so you know how that works, guys. We found with this, keeping a lower number, swing strength anywhere from 4 to 10. It's probably going to be a good range for that. Okay, so if you're testing and optimizing for different markets, that's kind of what you want to look at. About 4 to 10 here. Minimum boss line length, 3 is fine. You really don't need to get into the weeds on that because there's other ways that you can tighten up the trades. All right, deviation. You really want to stick with 0.8 to 1.1. You really don't want to go much beyond that. 0.9 has always been kind of the sweet spot on that one. 1, depending on the market, but yeah, 0.9 to 1 is usually going to be your sweet spot. Ticks per cluster levels. So with NQ, there's a lot more ticks, right? Like in ES, this might be 4 ticks, but that same move in NQ might be 16 ticks. So there's the idea that you may want to lump some of these levels together to come up with your cluster. It's up to you. I think most of our settings are all set to 1, but there's reason to believe that on NQ you might set that to like a 3 or 4, because what that's going to do is it's going to lump together some of those ticks to calculate the volume. Okay. Swing strength is based on the zigzags. Yeah. Swing strength is the zigzags. And it's really is how many bars does it have to break below before it's plotting a new wave? And that's kind of the more technical how it works kind of thing. Max CWAP length after boss. This is an important one. What this is doing is it's saying, how far down are we willing to go past the breakout point before we say, I don't want to trade that CWAP anymore? And what'll happen is, let's say, you've got this market's coming down, it's coming down, it's coming down. This CWAP may not have ever gotten hit. And so you could be taking a trade way up here to go short on a market that's already kind of done its thing. So by telling it that you can only have 12 bars beyond the break is saying that you aren't willing to trade it if it's way overextended. Okay, so that's a very important number. You see how this CWAP starts here and then it just stops all of a sudden? That's why. Because we would have hit the 12 bars. And so the CWAP says, yeah, I'm done. Wait for the next trade. It's too far extended. Okay, so that's what that's doing. So, can optimize that, see what works for you. Minimum bars outside the band. This is 1 open high-low close beyond the break of structure. Okay, so if this is our break of structure, we need 1 open high-low close below before we can trade that as a pullback. Very, very important. You want to have at least 1 in there, because that's going to show that your market is following through. You're not just, the idea is that you could get a liquidity sweep like that. See how this is like barely below it? Even this, you could say that's kind of a liquidity sweep. If you had a bigger chart, that would definitely be a liquidity sweep. This is saying that I don't want it to just close below and then go right back and pull back, because that's a choppy market situation. Okay, so that's what that one's doing. And then we talked about targets and stops already, so we're good there. We're good to go. Any questions on that so far? Everybody doing good? Feeling good? Cool. All right, so what we're going to do is we'll come up with one more quick setting. We're not going to spend a ton of time on this, but we'll come up with one quick setting where we can kind of turn it on and off. We'll go back to the MNQ 1000, and we'll just give you an example of if you want to deploy it based on, markets that are trending. So let's go here. We're going to go to a 1000 volume. Oh, that's good. I try to make it as simple as possible. Okay, cool. So I've got this on the MNQ 1000. The first thing I want to look at is the swing strength. Is this market really choppy, or is it smooth, or am I seeing too many trades, too little trades? To me, this looks pretty good. I mean, it's a choppy market, but Let's see. I don't like the swing strength where it is. Let me come down by 1. I just want to see if it's if we go down 1, if is that going to make it too choppy? Let's tinker with it a little bit here. So we'll go to swing strength. We'll go to 5. And we'll just re-enable it based on that and see what we get. So this is, kind of my starting point. Just go to the chart, check it out. What are we seeing? Not worried about profit and loss just yet. Yeah, it looks fine. So I'm going to leave that at 5. That was the biggest thing that I needed to figure out. So we're good there. So let's go down. I'm going to disable this. All right, we'll come back up. And now I'm going to kind of put in my assumptions, things that I would expect. 3 is fine. Standard deviation is fine. If you want to take trades quicker, you would make this number larger. Okay. It's going to get into the trade quicker because the market is, the channel is going to be wider. So you're going to get in quicker. If you want it to be, if you're getting in too soon, then you would drop that number because it's going to tighten up the channel. Does that make sense? We'll look at it. But I'm going to keep it at 0.9 because that's always been the number. Max CWAP length, I'm going to do 20. That's kind of always been my number, but we'll see. We'll see what it looks like when we get in there. 500, untype back test. Stop loss, enable algo stop loss. I'm going to actually set it to 0.5. That's right at the middle. Okay. Right at the middle. Minimum trade, I don't want to take anything less than 20. And so I'm going to set it that way. Whoops. Enable algo stop loss. Cool. Targets. Risk reward is one option, or you can use the algo target. I'm going to use the algo target set to 0.9. So that means it's going to be just below the swing high, swing low. Okay.
Hey, Jim, let's make it clear that when you select algo profit target, then risk reward only applies to target 2 and target 3 if you're using those.
Yes, very good point. Yeah, and that's part of the brains. So if you set it to risk reward, so we've got only 1 trade set right now, but let's say I want to add another position on there. So I've got it set to 250. Now you see how profit target 2 comes up and it's asking me risk reward. So I may want to set it to like 2 to 1, right? How do you get rid of it? You just go 0, 0 back out. So yeah, very good point. Thanks, Jeff. Max take profit. I actually will set something here at 150 just to, you never know. I'm going to go 10 o'clock to noon o'clock. Invalid trade time. I'm going to turn it off. And then I do want to see the VM. You know what? Just for fun, let's require it. We'll show EMA crossover. No, I don't want to see it. All right. Deal. Let's enable it. Okay, cool. The other thing that I want to look at. So you see how what I'm looking at initially is, are there multiple CWAPs on top and bottom? That's going to tell me that my distance beyond the break is too big if there's multiples constantly on top of each other like that. So that's kind of the first thing that I'm looking at here. It's really not bad. Yeah, I really don't hate it. I think it's probably fine the way it is. I'm not going to mess with it too much. Okay, so the next thing I want to look at is what's happening with my trades. I got a trade here. I'm not in divergence. It's a clean impulse, and we took a stop out. Is there any way that I could have taken a winning trade here The only way that I could have is probably if I increase my swing strength. My concept is that if I anchored here and went up and then pulled back deeper, that I might have had a winning trade there. Okay, so that's one thing that I'm just making note of. Obviously, I'm not going to change everything off of one trade. Let's go back some more and take a look here. Clean. Look how clean that trade is. Came right in, right out, right to target. Love it. Came in, stops a little too tight on that one because that was a winning trade. Had I, I got in a little, I would say even a little early. I could have gotten in later, right? So how do I adjust that? I can make the channel smaller and get in later. But the stop's too tight there for sure. Let's see if there's any others. Some of these are not trading. And we have momentum. We have number of bars. Why did this trade not go? Go into the settings. Why did it get out soon? It's because of the location of the target being at the swing high or low. Limit trades and direction? No. Interesting. I don't have it set to not trade those times. Jeff, do you have any ideas why that got filtered out here?
Yeah, I'm trying to look at your set. Well, I'm trying to figure out what your settings were.
Yeah, let me
Sometimes it has to do with minimum, maximum stop size or target size.
that's probably what it is.
Um,
Yeah, that's
it
probably
just
what
we'd
it
have
is.
to dig into it.
Let's go into stop loss and make it a little smaller. Um, and that'll probably open some of these up. Let's do that. And then targets 15. Let's try it now. It's required to touch the CWAP channel, not the CWAP line itself. Yeah, good question. Yeah, there it is. Yep, hit minimum trade size. Let's loosen up the stops on these. Yeah, you're good. Yeah, let's loosen up the stops. It's too tight, so let's do that. On this chart, it's too tight. It might work for other markets. Might work for, because we actually, honestly, we trade these on a 5-minute chart, and I have it set to right about the CWAP for my stops. But this is a different chart. It's more active. It's a lot quicker. So let's go to stop loss at 0.8. Let's see what that looks like. Okay, let's see what do we got here. Okay, so to me, this is really just way too choppy. You got trades everywhere. It's a little bit too active for my preferences. Just looking at the chart, I'm going, man, this thing's chopping all over the place. So there's a couple options I have. One is I can just size up the chart and just go to a bigger chart, and that'll solve the problem. The other is I can increase my swing strength, and it'll take less trades. But let's go to 2000 volume, and let's see what that looks like first. Oh, I did 200. Oh, God. Help us.
Ruh-roh.
We're going to be here a minute, guys. There's a lot of bars. Whoopsie.
What is that, like a 5-second chart?
Yeah, right, exactly. It's like a 30-second. No, not even. Yeah, look at that. 10:06 to 10:10. Yeah, just for shiggles. Let's look at it anyway. Yeah, there's actually not even any trades. Oh, yeah.
Hyper scalp. Well, you'd have to drop your stop and target, min max
Yeah, I'd have to
target
make them
size.
bigger, smaller. Funny. Yeah, scalper's delight. Knock yourself out. All right, let's go to 2000. I would think you could even scalp on the 1000. You could scalp. But you'd have to set it differently. Every setting's different based on what you're looking to do. There we go. That's looking better. Mm-hmm. Mm-hmm. Yep. I like this. Remember, we were talking about this earlier, how if we anchored lower and it was a deeper, pullback, I think that's what the location was on that. You notice how this one only has the one bar is above, but it's a base bar. So there is no follow through on that, which is why this one didn't work. Just fine. You can't filter everything out. Stop placement looks pretty good. Looks pretty good there. This one just didn't work. That's fine. This one looks great. Good target, good stop. This one eventually does go to hit stop, but again, it wouldn't have worked anyway, so I'm okay with that. Stop looks good there. That one didn't work, right? Let's go back. Let's check out this day. Stop was, I mean, you couldn't get a better stop on that because it came into the heat, but it ended up paying us. This one, yeah, looks good. This one, okay, so this one's we could have hit target on this one, right? If we had just a little bit higher up. I don't want to, change everything based on one trade because you're going to get those anyway, but good to know. We already talked about this one. This is one that we looked at earlier. You see how it kind of came up, chopped through, and then came up and out. There's nothing you can do to filter those out on a optimization basis. So let's go back a day. A nice trade there. This one's a little too tight. So even this is getting a little choppy. So I'm actually now at this point, I'm going to bump the swing strength just a little bit. Some of these are getting pretty choppy. So let's bump it up a little bit. It's not going to take away all the trades that we have, but it's just going to knock some of those out there, maybe a little more choppy than we want. Let's go back to 6 and see what that looks like. The thing I like about this algo a lot is you can really define where you want to get in and out based on the channel strength and the size and the entries and the targets and stops. There's a lot you can do with it, which I love. Yeah, it's still pretty choppy. Let's bump it up a little bit more. Seven, what does that look like? Yeah, that's fine. I don't want to get too tight on that because this is definitely a pullback, no matter how you look at it. That's a pullback. And then this one, yeah, no, there's no way to avoid that, so that's fine. But this tightens it up, or I'm sorry, loosens up the swing strength a little bit, so it's not so choppy, which is good. I think that looks great. So yeah, so here we go. So I think we've got something decent to start with. So then we look at it. Okay, we'll kind of look at the way that we've been looking at it, right? Is what's our higher time frame telling us? So let's go in here. We had this was trending as of right here on that day. So looking at this at, let's say you're coming in 10 o'clock, you're not quite seeing that cross yet, but you're coming in here. Okay, where's 10 o'clock? Right there. So at 10 o'clock, you're kind of crossing over. You've got a deep, a deep move there. And then off the open, you got a nice little pullback. It's up to you what you want to do there, but clearly structure is telling you that, if you're looking at how do I know if the market's trending? Are you creating lower lows and lower highs? Lower low, lower high. Here's what you need. If you're looking at structure, you're looking for one lower low, one higher low. Yeah. And then one lower low. Okay. 1, 2, 3 is what you're looking for. 1, 2, 3. If you got that, you're trending. So you can look at structure as a way to determine that as well. So to me, I would set this on a trending for the day. Okay. So we go in and we're going to look at it and say, okay, we want to trade the CWAP algo because we know it's a trending system. And so that's what we're going to deploy for the day. Where's my little box? Did I not go far enough back? Let's see. Let's add some days. Cool. Let's see, where's our box? Oh, that was NQ, not MNQ. That's why. Hang on. What day is this anyway? We'll just, they're both going to be about the same anyway. This is June 20th. Okay, so let's go to June 20th here. Okay, this is June 20. All right, so if we're coming in, we're setting it to trending. We're saying, yep, I want to trade this day. Let's see how we do. So trading that one, we've got 1 and 1, 1 and 2, 1 and 3, not good. So what do? We go back to the drawing board and we go fix the settings, okay? Because these aren't ready yet. Let's try one more day. Just, you don't want to base everything on one day, obviously. Let's make this MNQ. Today's too early on yet to really have anything to go off of. Let's say right here. Clearly we're trending there. What day is that? June 24th. Okay, let's go here and we're going to go June 24th. Okay, here's June 24th. Stop, win, stop, win, stop, stop. Okay, it's not ready yet. Okay, looking at these, if you're on a trending day, but you're still not making money, not ready yet. Okay, let's put it on a 3-minute. I'm curious. Here's the other thing too. Honestly, I don't ever like trading anything less than 30 ticks on NQ. I feel like you're just going to get chopped up. So let's change that too, because I think that's probably a big part of it. If we're not seeing any trades, then we're just not on the right chart. That's what I would say there. Let's go back here. Yeah, so one stop. See, and I don't like it as much on the 3-minute comparatively. So let's go back to the 2000 volume, and then we're going to change the minimum size. Yeah, I don't like it on the 3-minute. Let's go here and disable. Like, I just know me as a trader, I don't like to take anything less than 30. And if I don't have any trades, then that just means I'm not on the right chart for what I'm trying to do. So let's go 30. There we go. It's the chart settings. Yeah. If you're not getting trades. Yeah. See, this is better. Got a nice trade there. Nice trade there. Quick targets. That was today. Let's go back here. Yeah, there we go. There's win, stop, win, another stop. Here's the other thing too, is like some of these, you could even like this one, we could have loosened the stop. Not that I'm crazy about that idea, but that one would have been a target. Okay, cool. There goes my VML. That one wouldn't have hit target, so that's a stop out anyway. And then this one, that was clearly a stop out as well. Yeah, I don't know what Ninja's doing to me here, but let's re-enable it. See how some of these are not getting traded because of the minimum size. So in this case, you might even look to bump the chart up even more and see, because you might get a trade on those. The other thing that we can do is we could loosen up the stop a little bit, and that would maybe give us some trades there too. Because what's happening is the stop location is set, but if the stop is not enough ticks, it's not going to take the trade. So yeah, so we're still not getting that one either. One open, high, low, close below, came back. That one's too tight. So let's loosen up the stop a little bit more and see what that does. Some of this stuff's trial and error. You just got to go look at the chart and kind of figure out what you want it to do. Let's go to 1. So this is going to be right at the other edge of the CWAP. And how many ticks is this? So the trade would have been right here on this candle there. And the trade is big enough. We've got momentum on our side. We've got one open, high, low, close here. I wonder why this one didn't trade. It's getting filtered out somehow. I don't want to sit here and obsess over one trade, but I am curious. That's fine. I could dive in deeper and figure it out, but I just want to make the most of our time, and I don't want to obsess over a small detail here. All right, cool. What do you got, Jeff? You got something?
Oh, I'm sorry. Was supposed to be on mute, but I was going to say, do you still have the histogram filter on?
Uh-huh. Yeah.
Okay.
Yeah. Histogram's
Okay.
down though. Yeah.
Okay.
I don't know what it would be. That's okay. So let's go in and let's take a look at these settings. So I'm going to save the settings here first. I don't know why it keeps doing that. It's weird. My Ninja's going crazy. I didn't shut it down last night, so that could be a thing. Let's go to template. I'm going to save this as MNQ. Oops. MNQ starting point. Yes, perfectionism. Yes, exactly. 100%. I am absolutely a perfectionist if you haven't figured that out by now. All right, let's go in and let's run a back test on it. Let's see what these look like. Is that it? Yes. Okay, so we're going to go to template. We're going to go to load and MNQ starting point. Good stuff. Okay. Good. 10 to noon. Sure. Fine. Minimum allowables. Great. Looks like everything carried over. Required. Yes. Sweet. 3,000. Let's go back to we'll go back about a month. That's fine. Let's run it through, see what we get. Oops, I'm on NQ, not MNQ. I got to change that. So after this, we will take a break. And then when we come back, we're going to look at hybrid. Does more days give better results? I don't know. I think if you've got 100 trades and you're optimizing, you don't want to get too far beyond that, because what happened 2-3 months ago is not necessarily relevant to today's markets. So, but it's up to you. I mean, it's what do you want it to do for you? So yeah, cool. So it's been, up and down on this setting. Let's go half hour of day, entry time, 10 o'clock. There's not a lot of trades, actually. There's only a handful of trades, only 15. Oh, I'm on NQ, not MNQ. That's right. Hang on. Yeah. Yeah. Sometimes what happened last week is not good for this week. Yeah. Yes, it is hard work. And this is only like a sliver of what goes into creating these settings, guys. So what impact does AI have on the algo? Wouldn't that be a good option upgrade? I don't know, man. That's way over my head. I don't I don't understand how they even make AI work. So yeah, you're asking the wrong guy. Could it be a good thing? Could be if it's set up correctly. If it's not, it'd probably just destroy your accounts. I don't know. Garbage in, garbage out. It's all in the prompts and what you put into it, I suppose, too. I'm sure AI is coming in terms of these algos. I don't know what that looks like or when, but yeah. Oh yeah, AI is the thing now for sure. You can analyze live, yeah. I mean the markets are open for sure. There we go. Yeah, that looks good. It's good, great starting point, right? We've got decent profit, not a terrible drawdown by any means. Profit factor is decent win rate, win loss ratios look good. So good starting point for that. You can go to the chart, start looking at it and that kind of thing. But this is a good, like if I was running this as, just again, just kind of based on is the market trending? Yes. Okay. I'm going to deploy it. If I was doing that, I would think you'd do pretty well with these settings. If we go in here, we can just look at like a day that's clearly, on the up and up on NQ. Yeah, here. So we see how like coming into the session, clearly we're bullish. So we're not going to even look at trading shorts on that day. Like you would just go, clearly we're trending to the upside. I'm going to set it to go bullish. I'm going to take my one winning trade and I'm going to click my heels together and go about my day. Um, so let's go to half hour of day, 11. Still not a ton of trades, actually. There's only 43 trades. So I would actually, in this case, I would go back further. The first thing we could do is look at the time and expand it out, just to see if there's, maybe some better opportunities to add some time. I will look at it real quick and then, but if not, then you can go back and add more days to get more test history. How do you set it to go long only? What you do is you can set it in the settings. You would go see where it says long and short. You would just go long only. And then otherwise you can do the drop down menu from the chart as well to say long only. If you set it for 30 days, how do you know this is a good setting for the next 30 days? It isn't, is the short version. So that's the best way to answer that question. So if it's a 30-day test, then you want to run it for a week and then re-optimize. So think of it as like 4-to-1. That's the way I look at it. You don't have to do it that way. This is just a suggestion. But if you're testing 4 weeks, then you run it for 1 week. If you test it for 4 months, then you run it for 1 month. Okay. That's kind of the best way to look at it. So 4-to-1. Have you ever used it during news events? It'll handle it. It'll trade it, but I don't recommend it because again, coin flips, right? All right. So what do we see here? What do you guys see on this back test that is telling you a lot just by looking at it? No. Oh, you're talking about if you run it on news. Yeah. Profit versus drawdown. Yeah, they're about the same. What else? the glaring story. Yeah, there you go, David. Long only. What is this telling you? Let's go back to our 5-minute chart for a second. Remember, smart traders make money, right? Yeah. So if we go back and we add some days on our chart, right? Let's go back. We've got about a 30-day back test. Okay. Let's do even better. Let's go to the 30-minute because it's not going to work. Okay. So we've got about 30 days. Which way is the market going mostly? It's going long. Yeah. So I would bet that if we go from June 4th to where it flips right here on, June 20th, and we do longs only, I'm going to bet that this is going to be like really good for longs only. And what that tells us is that these are great settings to run when it's a trending market. Because again, we don't want to necessarily optimize based on oscillating days. You can with smaller time frames, but you want to look at, yeah, just look at like what days are trending. We want to run it those days. And after this, we'll take a quick break and then we'll come back. Yeah. Yeah, 1.54. It's not an incredible profit ratio. It's about 42 trades. It's not a ton of trades. 2-to-1 drawdown versus profit, which is pretty solid. Again, we've got all hours of the day, so that's a major factor. So if I were doing this, I'd cut it off at noon and start it at 9. Just cut out that losing time. Well, there's only one trade, so it doesn't really matter anyway. Oops. Let's go here. 7:30 did not take any trades. There just wasn't anything available. 9:30 is really where the trades start to kick in, obviously, and then it goes. There's profit though before that time, so you could leave it and just cut it off at noon. But then you're leaving that on the table, which is, 4 winners, it looks like. So you might not want to do that. In that case, you probably just cut out this time. Frankly, I would cut all of this out, 11:30 to 1, and just leave that out of it, and then chop it off at 1:30. But then you're kind of getting into, you know, maybe getting a little too aggressive with your optimizations, and there's not a lot of trades, so you could just opt to leave it as well. So. But yeah, so that covers it for that. Really, I'll just save this as starting point. I don't think there's any reason to like give it to everybody because I don't know that this is something that you really like want to hang your hat on yet. I think you'd probably want to optimize this a little more, or do some more testing by looking at the higher time frames and then dropping down and that kind of thing. So yeah. Cool deal. All right, let's take a break. We'll be back in let's come back in 10 minutes, 10:45. We'll be back in just a bit. Right, we are back. So what I want to do is let's go over the brain of the algo while we still have the CWAP algo up. We'll go through some of the different settings, what everything does before we go into the hybrid. So let's go ahead and do that. What I'm going to do is make this really big so we can see everything. And actually, I'll just pull this over like that. So cool. So obviously back test or optimization, you've seen us do a little bit of both. You select your algo, so that's all good. Strategy parameters are per algo. Entry direction, long or short, short only, right? Strategy sizing. So you can do static, which is just going to be ticks. Okay, so how many contracts do you want to trade? And then it'll size your position, static number of contracts every position. Fixed cost is going to be dollar size risk. Okay, so if you set it to $500, that's $500 risk per trade. Okay, that's fixed cost. What it's going to do then is if one trade is 20 ticks and the other trade is 40, it's going to automatically size your positions according to the number of contracts that's going to hit $500 of risk, which is great. It's a huge thing, especially for prop traders. Then you have, excuse me, have percent of balance. So this you would have to put in your starting balance and then tell it how much percent to risk per trade. Really, I think most traders are probably just going to use, the fixed cost, but it's up to you, whatever you want to do there. So that's what that does. Market or limit orders. Okay, so market order is going to get into the trade right away. Limit order is going to acknowledge that the conditions have been met and put a limit order where you tell it to. So if we go to limit here, entry offset means if you have this as your entry location, then 0 would be exactly at the entry location for limit order. If you have 10 offset, then that means your offset is going to be there. Okay, so it's going to come down. If you're going long, it's going to entry offset 10 ticks lower. Okay. Barry, I don't think I'm having any trouble with it. I think I'm doing just fine. But we are posting all the templates in Discord. Yeah, there's templates available for each one. They've already been optimized. So I'm not too focused on the optimization this week. I'm more interested in going over how to deploy the algos in different ways and figure it out. If you want to learn how to optimize, the AMAs are great for that. Okay. Yeah, so that's what that does. So max pending order distance. So let's say, you get in and your entry location is here and you've got it set to, -5, right? So it would just be 5 ticks offset. It's not negative, but it'd be 5 tick offset, meaning you're going to enter if the market comes down, you'll enter on a limit order to go long. Okay. This is saying how far up can it go before coming back to get you. In other words, if it's already gone 20 ticks and that's your target, then you probably don't want to get into the trade anymore because it's not a valid trade. Okay, so that's what that does. We'll go back to market orders. Cool. Action on opposite signal. You can exit, you can reverse, or you can do nothing. Pretty self-explanatory. That means if you're in a long and you get a signal to go short, what are you going to do? And it's a hot topic, TJ. Undecided, but very apprehensive. Yeah, we could talk offline about it. It's more involved. Yeah. Action on opposite signal. Limit pre-order gap bars. This would really apply to limit orders, if I'm not mistaken, right, Jeff? Limit pre-order gap bars, meaning like how many bars is it after you get your signal to get in?
No, the pre-order gap bars has to do with when you're using a bar type that is like a Renko or a range. And sometimes the gaps, the ticks coming in will gap over the definition of the bar. So in other words, you have a 5-tick range bar and the incoming ticks gap 8 ticks. So it's going to print 2 bars with the same timestamp. And when it has a different, when it has the same timestamp 2 bars in a row, that can complicate, what the algo is doing. So that gives you a way to just skip over those, because that means there's just a big burst of volatility. You may not want to be trading anyway until that calms down, and usually only lasts, a very short amount of time. But that's what the limit pre-order gap bars is when you're using Rankos or range bars. That's probably that's the takeaway.
Okay, cool. Just so you guys know too, there is a rainstorm out here. My internet was a little choppy there, so I apologize if I cut out. All right, allow entries on exit bars. In other words, if you take target or stop on a bar, do you want to enter on that same bar after it closes, for example? And that's what that does. Enable algo stop loss. We've kind of looked at that. That's going to depend on the algo as far as what those do. The alternative is you're going to have tick-based stops and ATR-based stops. Okay, ticks are ticks, ATR is ATR. Stop loss ATR is how many ATR, multiples. So if you're using a 14-period ATR and you say, I want my stop to be 2 times the ATR, it would put a 2, okay? Trail trigger. Let's say, when you get 40 ticks into positive territory on NQ that you want to start trailing, that's what your trigger is going to be in ticks. You have number of bars back, meaning if you want to just trail the low of 3 bars, you could do that way, or you could do ticks. So if you want to trail by 40 ticks, you could do that as well. And then break even trigger. Let's say, once you get to 20 ticks, you want to go to break even. Then that's what that's going to do. And you need to put in break even plus if you want it. Break even plus is going to give you, like, if you want to scale out a couple ticks to cover commissions, you can do that. Cool. So we've covered that. Targets. You can optimize with trailing ticks. Yes, absolutely. Target types, you got ticks, you've got ATR and risk reward. So same ticks and ATR is going to be exactly the same. Risk reward is a multiple of your stop. Okay. So in other words, a 1-to-1 risk reward, 2-to-1s, so on. There you go. You're adjusting ATR. Yes, exactly. So ATR is just going to tell it how many ticks, where to put the stop. The risk sizing is going to tell it how much to risk based on that stop. But when you're trailing, though, you can only trail by ticks. Okay. Trade start stops, obviously pretty self-explanatory. Military time, you've got it. So this would be 2:30 in the afternoon. Exit at end time means that if it gets to 2:30 and you're in a trade, it'll close your trade. And if you turn it off, it's going to run the trade until it's done or till the end of the day. Ignore trade time. Self-explanatory. It's going to trade around the clock. Okay. Invalid trade windows, you have start and stop times. And so this is saying that for lunch, it's going to ignore the lunch time. Okay. You can exclude certain days of the week if you want. It's up to you. Skip days, this is going to bring up a window, usually on your other screen. And you can add dates. So let's say we want to block, we've already got the 4th of July blocked. Let's say, we want to block the day after the 4th of July as well. Then you just pick the date and it will not trade those dates. You can do past dates and future dates. Past dates are obviously going to apply for back testing. Future dates are going to apply for live trading. So let's say you want to turn it on before you leave for the 4th of July, going out of town. Then you turn it on, but you're going to block the 4th of July. And then it'll just do what it needs to do. So standard template. Yeah, the ones that we're sending out. Yeah, those are your starting points for sure. Good to go. All right, money management. So daily max goal, daily max loss. So let's say you tell your algo, I'm trading $500 per trade. I have a max goal of 2,000. If I'm up 4 trades, I want to be done for the day. If I'm down 4 trades, I want to be done for the day. Okay, you can do that. There's a block trading before market close. I think there's an option. Let me see.
Well, there's an option to exit at session close.
Yeah, that's right there. So yeah,
You
you want.
just set your trade times to tell it when to trade and not to trade.
Yep. Yeah, it's good enough. The other thing that you could do on some of the newer ones. So let's say you want to still keep the trade at 230. Okay. But you want to make sure that it's done trading by 5. Here's what you're going to do. You're going to say, um, yeah, or yeah, so let's say by 4:30. Okay, so at 4:30, I want to be done trading. I know that. I'm going to hit exit at end time, and then I'm going to go to invalid trade window. Let's say I want to be done trading at 4:30 or 2:30, and I'm going to set it 14:30 to 16:35, and then you enable it. So it's not going to take any new trades based on this disabled time, but it will close the trade at 4:30. Okay. So that's the way to get around that. If you want to go that route and you want to get that defined, you have that ability. So, when you have reset P&L time slot, do this if you're a day trader. If you're trading futures, just click that box always. Yeah. And then high watermark. So let's say you don't want to give back some of your profits. What you're going to do is you're going to activate your high watermark. Let's say you activate it at 1,000. You know that once you're up a couple trades, you don't want to give back more than half your profit. You just set it to 1,050. Now, this is all based on close of trade. Okay. When the trade is closed. Okay. That's what these are doing. Assume it's always based on when the trade is closed. Okay. So if you are up, high watermark is activated at 1,000. If you are up to 1,200 intra trade and you do not take profit and you get out and your balance is 900 at the end of the trade, it is not going to stop trading, even though you got to 1,200. So let's say if you do get to 1,200, you want to stop trading. Realized plus unrealized. Now, very important to mention, this will not close your trade. It will not close the trade. It will just tell the system that once that trade is closed, it will stop trading. Okay. That's what that is doing. It will not close any trades for you. You have to do that manually if you want to. Cool.
And can you just mention that you can close it manually without actually disabling the algo by using the drop down menu?
Yes. Yes. Yes.
You
Yes.
just click off from the drop down menu.
Yes. So what you do is you go here and you go off. Now it's not working because my thing's freaking out, but just go to off.
You're in backtest mode, so we graded out for backtest mode.
Oh yeah, yeah. That's why then. Okay. Cool. Yeah, good stuff. Enable backtest money management exits. This is something new that we added, is that if you are trading this live and you know that once I get to my daily goal, I'm going to turn off the algo and I'm going to stop trading because I made what I need to make. If you want to kind of test for that, then you need that checked. This will not exit trades in live markets. It will only do that for the back test. Okay. So that is there in case you know, like, I'm going to turn it off. Well, then you can set it that way. Okay. So that's money management. Let's go back here though, because it's kind of on topic. Let's say you want to leave a runner and you want to add another in a position and you're going to do half and half. So you still got 500 in risk, but you're going to leave a runner. And so your stops are going to be the same for all of your trades. You can't do different stops, but you can do different targets. Okay, so let's say target 1 is 1-to-1, 2-to-1, and then you want to leave a runner on, and you're going to put 750 on each trade. I don't know. But you want to leave a runner. What you do is you don't put a profit target for the runner. Leave it at 0. Then you need to set a trail stop that will exit that third position. At least the third position. Could even exit the second, obviously, too. So let's say you've got, actually, let's stick with ATR. You've got an ATR stop of 2, and you're going to trail 40 ticks, and you've got your break evens and all that, and it's going to trail by 40 ticks. And so that's what the runner is going to do. It's going to trail the stop by 40 ticks. So if your first target, normally is around 40 ticks, then it'll exit the first position and start trailing. Okay. So that's how you leave runners on. Or multiple positions and targets. Limit trades in one direction. This is like what we were talking about, with like an Elliott wave theory where you've got, 1, 2, 3, 4, 5, and you don't want it to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and you don't want it to keep trading. And then you would just set like 2 max trades per direction, right? Makes sense. Let's see. Reset consecutive trade count on session close. Yes, you're a day trader. Reset it. Unless you're trading swing on I don't know, then maybe you wouldn't, but cool. So that's what that does. You can turn that off and they disappear. Moving average filters. You've got, if you want to see them, you hit show. If you want to require it, you hit require. You don't have to have both of them. You can have one or the other. You've got either a single moving average or a double moving average. The most popular is going to be a double, where you use an EMA, an SMA, or stepping MA. Stepping MA is going to be more applying to probably a single moving average. But if you have 2 EMAs, what this is saying is that the 9 needs to be above the 20 to trade long. You can also set it on primary bars, or you could set it on a higher time frame. So let's say we want to know what the 5-minute chart is doing with the 9 and the 20, then you can set it to that time frame. Only minutes. You're not going to get volume charts and all this weird stuff. Just minute. Okay. Or you could just go back to primary bars. If you want to trade reversals, what you can do is you can flip these. Now what it's saying is that if the 20 is above the 9, in other words, the 9 is below the 20, then it is going to go long. You would do that for reversal-based systems. So you can flip those numbers. And then just you've got, some different color options there. If we go to single stepping average, what that's going to do is now your stepping average is going to be based on ticks, based on the primary bar, step method, level or trend. Actually, I'm not sure on that one because I haven't used it that way. So Jeff can chime in on level versus trend and what.
Okay, so you have a single step MA. Level means if the entry is above the line, longs only. If the entry is below the line, shorts only. Trend means, how the step MA, it'll either be flat or going down, flat or going down, flat or going down. So as long as it's either flat or going down, you're in a downtrend. The minute it flips up, now you've started an uptrend. And so it's the direction of the step line, not whether you're above or below it.
That's really cool, actually.
Hey, we do cool stuff.
Yeah. Stepping size is ticks, is it?
Yeah, it's ticks.
Okay, cool. Interesting. I like that. Very interesting. Okay, so that's what that does. Good stuff. I think we covered everything there. Market structure filter. We've been looking at market structure all week. That's the zigzags. You can trade based on that. And there's a bias strip if you want to see like, are you long or are you short? You can do that. And then zigzag is going to show the zigzag requires, again, going to require that you are in the right direction to trade that. So if you are making higher highs, it will trade long. If you're making lower lows, it will trade shorts. Simple. And then you can change how it looks. Again, swing strength, how many zigzags? The lower the number, the more zigs and zags. The higher the number, the less. Okay. So that's what that does. And then we get to the VM lean, which we've been looking at quite a bit. Let's turn these on and we'll go through them all together on the chart because it's going to make more sense. Then you got all the visuals and instrument and all that stuff. You already kind of know all that. Start date, end date, break at end of day. Yes. Include commissions. Sure. You probably want to do that so you know what your commissions are costing you. These are fine. You don't really have to mess with these. Minimum bars, 256 is fine. Order resolution standard. Fill limit orders on touch. What that means is, let's say you are here. Your target is 19,980 and it comes to 19,980, touches, but it never fills you. If you're missing out on a lot of targets, you can set fill limit order on touch. As soon as it touches that level, it will trade market closure and just take the best available price to exit your positions. Where that can make sense is if you're trading a lot of contracts. If you're trading a lot of contracts, you may only get a partial fill, and then it might go the other way without you. So fill limit orders on touch means that as soon as it touches that, it's just going to hit market order, close out all your positions. Okay. Entries per direction, 1 is fine. Do you have to have this set to 3 if you trade 3 different positions up here, Jeff?
Yes, you do.
Okay, there you go. Leave it at 3. That way you always get, if you're trading multiple orders, just leave it at 3. Even if you're trading 2, you can leave it at 3 because it's only going to trade based on if you have the risk in there for the stops or for the entries. Entry, always all entries. Exit session on close, yeah. Set order quantity, strategy. Time and force, good till close, good till day, or sorry, good till canceled, good till a day. Actually, this is day. I don't know what GTD stands for. I just always put good till canceled. Cool. I think we've covered it. Let's go ahead and let's add these on the chart and take a look at them. They might even pick a different algo. No, this is fine. Let's stick with this. All right. So don't worry about setting slippage. Yeah, don't worry about setting slippage. The slippage is it's more for ninja strategies. Our team, when we put these algos together, and we put together the brain of the algo, we've completely redone how Ninja does backtests. So you do not have to put slippage in there because it's uptick, downtick. Our algo knows where the entries and exits are. You'll see in a lot of cases where, if you're entering on market orders and you've got a really small chart, you can see that, even though the entry is supposed to be here, let's say, it'll actually fill the order here, even on the back test. So don't worry about slippage. It factors that in for you. But yeah, good question. Cool. So let's go moving average, go show, and we'll go double EMAs, primary bars is fine. Show the zigzags. 3 is fine. And then we'll show the panel. So we've got a couple different options here. Let me turn these all on. All right. So you've got a fast and a slow. I'm just going to show you this and then we'll go to the chart. Let's say this is 6 and 12. It doesn't matter. And so, yeah, here we go. So fast and slow. There's going to be EMAs on the momentum as well. So I'm going to show you what that looks like. There's 3 different settings in here. You've got histo, BBs, and EMAs. Let's throw it in here. Yes, double EMAs means a crossover. Okay, so we got to make this really big. Okay, histogram, BBs, BBs, histogram. Okay, so if the BBs are below 0, then that is BBs are, you're requiring the BBs to be below 0. It's only going to trade short from here until here. If you require the histogram, it's going to trade short from here to here. Then it's going to trade long. Then it's going to trade short. Then it's going to trade long. Okay, that's what those are doing. The EMA crossovers, you see these EMAs here? These are on the momentum system. So when we get the crossover here, this is engaging shorts. So let's say you don't want to wait for the histogram to go below 0, and you don't want to wait for the BBs to go below 0. Then you would set a EMA crossover, and this would be an earlier detection that the momentum is shifting. Okay. Notice how this even happens even well before the EMA's crossover here. So it's just different options, things that that you can look to do. Cool. So that is the brains. That's what the brains does. Oh, structure. I know we've got multiple structure things going on here, but this is the zigzags that we put on the chart. So what this is saying is that if you're making lower lows, it will trade short. If you're making higher highs, it will trade long. Cool. Everybody good on that? Anybody have any questions on any of that? We do have training in the members areas. Once you buy an algo, there's all sorts of training on the brains. There's also training on that specific algo that you get access to, as well as a very, very comprehensive user manual that tells you everything you could ever want to know about how the algo works. And then in the AMA, we cover optimizations and all that kind of stuff. Cool. All right, good. Let's go to hybrid algo. Anybody tired yet? Okay. I'm glad you're not. AMA stands for Ask Me Anything. Yeah. I'm not going to spend a ton of time on the hybrid. I think we'll go through what everything does. We'll look at it on a chart. But I'm not going to spend a ton of time on this. This is one that you really want to run as an optimized system. Yeah, I think so, David. Yeah. Thank you. Jeff does a great job on those. Let's pull up a new chart. Let me actually clean up some things here. Yeah, you're welcome, Luke. All right. Cool. I've got some things cleared off my screen now. Let's pull up a new chart. And this is on MNQ 20, 160, and 16. What the? I know. This is a different system. It's unlike anything that we have out there. So we're going to go to Renko. Our bar size is 20. Reversal is 160. Offset 16. There we go. And that's the chart. Notice how the wicks are on the Renkos. Very important, especially for this algo as well. And so that's what our chart's doing. So these are our, our bricks, are set to 20, 160 for the reversal, and then offset is set to 16. That means every time we close, the open is offset 16. And that's just how these systems are set up.
Hey, Jim,
Custom.
you
Yeah.
may want to mention that the Renko BXT is required for this one, and it's a free software on our website.
Yep. I don't have to mention it. You already did. Thanks,
Okay.
Jeff. Hang on one second, guys. I'm still muted. Okay. There's 3 different ways to run the algos. Semi-auto, active, daily preference based on the trend of the day, deploying which algos for the right markets. And then passive. Passive means that you are running just completely optimized. You are not intervening in any way, shape, or form to tell the algo what to do on what day. There's 3 different ways to run it. I'm showing you all 3. Why? Because this is Algo Week. We're here to learn everything we need to know about the algos, and however you decide that makes sense for you, run it that way. I can't tell anybody how to trade. Okay? How do you backtest with fake open style Renkos? These are not fake. These are not fake. Yeah. These are custom Renko bars. They come with the software. They're free. We'll give them to you. They have the wicks. But here's a fun fact. Even though the wicks are in here, the system is still not backtesting based on the Renko bar. What do you mean? Up, tick, down, tick. Even though the algo's doing all this, and you might think, well, did it stop it out or did it not? Doesn't matter. If the market detects that the stop was here and then it went up and then it went down, it's going to take the stop. Even if the stop is here and we don't see that the market came down in here, it's going to take the stop. The systems are really, really well designed in that way that they're completely redid the back testing engines. So what you see is what you get, which is a beautiful thing, because how on earth can you trade something that you can't trust, right? So, yeah. Those are like, and well, red is going to be shorts usually. Green is going to be longs if you're seeing like the back painting. Let's go ahead and add the system in here. Let's go to hybrid. Okay, so you got multiple different signals available on the hybrid. You have a reversal signal. You have a wick signal. And let's see, enable wick signals, enable histo momo signals, or BB momo signals. There's 4 in 1. Okay, I'm just going to deploy all of them so that we can see everything. Let's enable it. All right. What is a reversal signal? If you get a reversal bar, that's a reversal signal. Plain and simple. Very simple stuff, right? So we get a reversal bar, it's taking the trade. If you are looking at the histo, then once you get a change in histo, it's taken the long. Once you get a change in the histo, it's taken a short. And there's the trade. Also, just so happens that it's coming in on a reversal. So it's kind of, some of these are going to be the same, you know, on each bar. And then you've got the BBs. It's going to take a signal when the BBs cross over, which happened right there. That's why that trade was taken. Okay, so that's what those are doing. Pretty simple, pretty straightforward as far as that goes. The wicker is a little bit more involved. What I'm going to do is I'm going to disable some of these others, and then we'll go into it. Oops. Let's leave the wicks on. We're going to turn off the histo and the momo. We'll come back to some of those. I don't want to get into like totally training on each algo because the AMAs are in there. And if you want to learn more, we can certainly get those to you to learn more about it. Max wick entries per reversal. We'll go over that. And then max bars to wick. We'll go over that. Minimum wick size is going to be important. Let me pull up a template actually. Let's go to MNQ Eastern. Yeah, we'll do this one. Cool. So that's already set. Max wick, then max bars is 18. Minimum wick is 24. So that's cool. Let's pull it up and then we'll look at it after we pull it up. All right. That one came right at the open. It's hard to see because of those dotted lines. So let me see if I can find another one for us to look at. Okay. So we get our reversal bar. And then we've got a wick, a large wick. You see that large wick? If we get a large wick and then we get the bar closed down, it's going to enter that trade short. There it is. If we get, and there's our reversal bar, large wick, closure, enter. That's what it's doing. If you get a large wick and then you get the close in the direction of, of the market, then you're going to take that trade. So you have a minimum wick size that you can set. So let's go into the settings. That's not what I wanted to do. Sorry. We'll just add it in here again, and then we can look at it. Cool. Let me pull up the template again. Okay, so max wick entries per reversal. What this is saying is that if we have a reversal long, it's only going to take the first long. It's not going to continue. Let's say we get another big wick. It's not going to take that trade. It's only going to take one per direction in that case. Okay. So that's what that's doing. Let's go to the next one. We've got max bars to wick signal. What this is saying is how many bars after the reversal are you willing to allow it to go before putting a wick and getting in the trade? So what you're doing is you're setting this as essentially a higher low retest of the reversal, which is a great way to trade, by the way. And because of the size of this bar, it is a very telling story that the market is able to go that much in the other direction. It is solidifying the fact that the market is changing direction and changing momentum to the long side. When you get that, and then you're telling it, don't trade if there's 18 bars going long before getting in. That's what that's doing. And then you have minimum wick size, meaning how big does this wick need to be before you're considering taking the break, or really the close, which is essentially a break. Okay, so that's what that's doing. Minimum wick size on this one is 24. And bars to wick signal is 18. And then this one is not set to, it's not set to be, dynamic sizing. This is one that came out before we did the dynamic sizing. So it's not going to size your positions. You have to tell it how many contracts to trade, and then you've got ticks or ATR for stops. Targets, you can do risk reward if you want. Otherwise, you got ticks or ATR. This is set to ticks. Here's the deal. It is, these are Renko bars, okay? Because they're Renko bars, because they're fixed range bars, using ticks is perfectly fine for stops and targets. You definitely can use stops and targets at ticks. Don't worry about ATR. In fact, I would prefer to use ticks. You can also optimize everything based on these ticks. And I would say, once you get your market of choice, then you know what you're going to, want to do with it. And then you'll know what these need to be, and then you'll have kind of a range of, I know that on, MNQ, my stops are going to be anywhere from 30 to 60 ticks, and my targets are going to be anywhere from 30 to 60 ticks, and that's your range that you test. You've also got break-even triggers. Highly, highly, highly recommended that you use this on this algo. Use a break-even. This algo, it's very important to do that. It's going to give you better results. Okay. You can leave runners on. Again, the way that you do that is you add contracts. Let's say you want to leave 2 ticks on a runner. Then you go down to your target. You're going to leave it set to 0, but you're going to want to trail. Let's say you get to 34. You're going to start trailing by, I don't know, 34, let's say. Then you can trail as well. So Totally up to you. Here's my thoughts on trailing. Test them separately. Test them separately. So for example, let's say we know we want to leave a runner on. Then on the first one, I'm actually not going to set a profit target. I'm going to test this as my runner. And then my stop is going to be 34. I've got my runner set. I've got my break even set. I can test that separately to know if it's even an advantage to leave a runner on. Because if you put it all in one, it's hard to decipher what's what, you know. I think it's better to test them separately. Yeah. So that's really it. That's what those are doing. Let's go into the other signals. I'll go over those briefly. All right, so we'll go over reversals, minimum pullback bars. Sorry, it's been a while since I've gone over this. Minimum pullback, does that mean how many bars this way, Jeff, before you get the reversal?
Yeah, so it's count the number of bars before that big long reversal bar, and then that puts a limit on that. How many of those?
Mm-hmm. Cool. All right, so that's great. And then, so yeah, it's just whatever your Renko is set to. If you get a reversal bar, it's taking the trade. Pretty straightforward. Momos and BBs. All right, max bars to Momo signal. What this is saying, similar to like the other one, after the reversal, how many bars can you allow before you get the crossover on your momentum? So the cross happens here, right on the reversal. So you're good. You would take the trade. But let's say you get the reversal here and you don't get the Momo, you don't get that moving over until, till over here, then maybe that's too far gone and you don't want to take that trade. So that's what that does. Same thing on the BBs. Minimum opposing Momo bars. What this is saying is how many bars have to be in the other side before it goes green. What this is eliminating is when you get like your momentum's up, comes down, and comes right back up, then that may not be enough momentum shift to want to take a trade there. Okay. So that's what that's doing. Yeah. Cool deal. Max bars, max opposing. Yeah, same deal. Same for those. So that's the hybrid algo. That's what it does. That's how it works. This is already optimized. You don't have to optimize it. Okay, let's there was this template. We can go in and look at the numbers. Yeah, it looks great. This has already been optimized for you. Half hour of day, clean, there's nothing you have to do on that. We can look at the other template too. I think we have another one for you guys. We'll run that. Hybrid, there we go. Everybody say thank you to Lennon for doing these settings for us. These are great. Really good. I don't know what am I doing. CL, that's what it was.
And Robert gave us the CWAP templates.
Nice. Thank you, Robert. Good stuff, guys. A lot of time that goes into these. It's not like it's just, oh yeah, we just poke a few numbers in there, grab a beer, sit down, watch a show, come back, and we're making money. It's not, I wish it was that easy. These guys put time into these, so. Oh yeah, this should be good to go. Let's go ahead and run it. I think I do need to download some data. So let's do that. I'm going to show you that again. Historical data. Yeah, I don't have crude in here. So what I'm going to do is go to download. I'm going to go to CL. And I need 27th. So I'm just going to go back to May 1st. It's fine. I'm going to do tick data, not minute data. Last is fine. You don't need bid ask. Did that download already? That was fast. Yeah. All right, let's run that through. Um, I don't think you're going to really have too many gaps on futures. I mean, not if you're setting it to 24/7 default. So I don't think that would really be too much of an issue. So
Even if you have gaps, it's still going to use the settings that you set to look back and make sure that everything is satisfied in order to get a signal. So if it doesn't, you won't get a signal. That's pretty much how that would work.
yeah, there you go. So we got about 40 trades, 3-point profit factor, low drawdown, good returns. Everything looks awesome. Yeah, it looks great. These are good settings too. So both of these are ready to go. We've got one for crude and we've got one for MNQ on those. So those are all set, ready to go. What questions do you guys have on that? Anything else that you feel like we need to cover today? I think we've covered a good amount. Went a little bit long yesterday, so maybe we'll cut it a little short today since we kind of covered everything. We've gone over the brains of the algo. We went over CWAP. We went over hybrid. Got some good stuff together. Hybrid, optimize and run it. You don't need to be doing semi-auto on this one. In fact, I think this one, the best way to run it is just optimize and run it. Don't worry about trying to, deploy it on certain days or certain things. Just run the algo. So some of the other ones you could do any selection of however it works for you. So they can all work for trending, really, for the most part. Yeah. Sideways algos, I think we'll go through them as we go. We'll try to point them out. This would be one that I think you can run in either instance. And that's why I say just run it. Yeah, could be tough. Well, you run it in sim, obviously, first. So good. Yeah, no worries. It's gonna be tough to get me on the phone. If you have a question about the algos and you need to talk to somebody, send a message to support. We do have some staff that can reach out to you and call you. I'm usually booked most of the day, so it usually takes me at least a couple days to get back to you on phone. So, how much does it cost to develop the algo brain? A lot. A lot. We've got 18 algos under our belts, and we've slowly been redoing the brain as we go and making it better and better. At this point, we've got it where we want. We're adding new filters and features as we go, but yeah, no, it's a lot of time and a lot of money, but it's all good. It's worth it. Oh, it's been a lot of time. Yeah, get trained up on the algos, know what you're doing, and then yeah, you can deploy them and sit on the beach and have a beer. Absolutely. Yeah, I hope so. It's good. It doesn't have to be hard, right? So, let's see, rank of variance and day trading. Yeah, this is a very popular algo. Yeah, we did really well with this one. A lot of traders took it and ran with it, and we've done a few events on this one and done some different different settings and things like that. But we've had a lot of traders do really well with this one. Yeah. Yeah, doesn't have to be difficult. It's just takes time to get a hang of things, just like anything. You're never going to get to be like where you're, maybe you're a savant and you get it overnight, but most people, it just takes a little time, get used to it. Practice makes progress. Yeah, these algos are all great. So cool. All right, well, that's going to do it for us. The templates will be loaded into Discord, so make sure to get them in Discord. If you don't have Discord, send a message to support, and we'll get them over to you. Don't worry about it. Yeah, cool. All right, guys. Have a good one. I will catch you all back here tomorrow. Take care. Cheers, everybody.